My name is Andrew Stotts, and I want to welcome you to the Valuation Master Class final presentations. Today, we're going to listen to another presentation from one of our graduating students. I'm excited for this one because Pushpa is doing Mitsubishi, I believe, and I'm really interested in what's going on with that story. So let's kick it off. Pushpa, how are you doing?
I'm doing pretty well. How about you?
I am good. And I know you've been working so hard to get to this point. So I'm going to bring up your presentation. Hold on. Let me just do that. All right. So your presentation now shows up on the screen. What I'm going to do is I'm going to exit in just a second. So as soon as I exit, then you start. You ready?
Yes.
Okay. I'm going to exit now.
So, my name is Puspa, and I initiate coverage on Mitsubishi with a sale recommendation based on a target price of 2,278 Japanese yen, implying a downside of 12%. I derive my target price from free cash flow to the firm-based valuation using a WACC of 8.5% and a terminal growth rate of 1%. Some of the major highlights are the most profitable metallurgical coal business is going down. Expecting Lawson as a next generation convenience store could still be challenging, and major investment in natural gas while the market looks oversupplied. Let's look into the history of the background of the company. The company was founded in 1870 and has 150 years of existence. Mitsubishi is a conglomerate with a diversified business across industries, including energy, industrial finance, automobiles, banking, machinery, and so on. The company has 1,318 subsidiaries and with a total market capitalization of 11 trillion. So the major strength of the company is its diversified business. Let's move into the first story. The most profitable metallurgical coal business is going down. BMA, which is the 50% owned company under the Mitsubishi, is the largest metallurgical coal company with a 30% market share. And BMA is also the largest profitable unit within the group. And the group contributed 40% of the company's net income in 2023. However, the coal prices are expected to fall by 28% in 2024 and 12% in 2025, as per the World Bank, which would cause BMA's net profit to fall by around 25%. And the second story is expecting Lawson as a next generation convenience store could still be challenging. Lawson is the third largest convenience store, and it recently got a major boost through the 50-50 partnership with KDDI. And with the collaboration, the company is expecting 22 to 30% increase in daily sales through expansion of real and tech convenience by leveraging business infrastructures, AI, and digital technologies. However, the Japanese retail market is expected to be slow paced, suggesting the market is pretty stagnant. Hence, enhancing its sales would be a real challenge despite highly valued collaboration. And the third story is a major investment in natural gas while the market is looking to be oversupplied. By 2028, the global supply of LNG is expected to increase by 43% to reach a total volume of 666 metric tons per annum, as per IFA, stating that the LNG capacity would exceed the IEA's long-term demand scenarios of 2050. However, Mitsubishi is aggressively investing in the natural gas segment with midterm strategy to invest around 1.2 trillion Japanese yen, mostly in LNG. However, the current Henry hub price is expected to grow from 2.8 to 3.1 by 2025. Hence, a stable profit in natural gas sector is likely till 2025, which would fall after that with increase in supply of LNG. Let's look into the recent quarter data of the company. In the second quarter, Mitsubishi experienced a slight fall in revenue with 3.2% year-on-year decrease, mainly due to falling resources price. However, the net income increased. That's because the company sold stakes of Lawson to KDDI. And some of the latest news of the company is our investment in natural gas is in progress. Mitsubishi's share price fell by 9% in the month of November, and Mitsubishi is on the verge of establishing EV to operate an online platform providing comprehensive EV-related services. Now let's look into the constant to growth, which is considered to be neutral for Mitsubishi. In terms of capital, the company is rated AA by RNI in terms of capital allocation. Hence, the capital constraint is considered to be minor. In terms of operation, most of the purchases are made from the companies that Mitsubishi is the parent company of, and supply risk is minimal. And in terms of market, the company has vast and diverse line of products. Hence, the market constraint is considered to be neutral. In terms of human resources, the company has all kinds of policies and practices related to human resources. Hence, the constraint is considered to be minor. Now let's look into the revenue structure of the company. Mitsubishi is a vast and diverse, vast company that has diverse range of business products from natural gas, mineral resources, chemical solutions, industrial materials to automotive and mobility, etc. The company generated total sales of 19.5 trillion Japanese yen in 2024, and the major contributor is consumer goods at 18% revenue share, followed by mineral resources at 17% and industrial material at 13% and food industry at 12%. Being a Japanese company, the major sales contributor is Japan with 49% revenue share, followed by USA at 15% revenue share. Now let's look into the FBMR of the company. In terms of FBMR, the company appears to be worst relative to 2,210 non-financial companies in Japan, considering all four metrics of fundamentals, valuation, momentum, and risk. Mitsubishi is ranked average in terms of fundamentals due to a significantly lower operating margin. In terms of valuation, the company is neutral as it trades on high PE relative to other companies. In terms of momentum, it is considered to be worst due to fall in revenue and negative EPS. And in terms of risk, Mitsubishi is ranked among the worst 20% due to higher beta and debt volume. Let's talk about the Porter's five forces. The company is 68% attractive in overall terms. In terms of rivalry among competitors, the attraction is at 67% as the company is well diversified into 10 business segments, and the brand loyalty of Mitsubishi is very unique, which sets it apart from its customers. In terms of bargaining versus suppliers, the company is 60% attractive as the company again has 10 business segments, and considering the diversified line of products where the goods are generally within the group, only minimal control of outside suppliers exist. In terms of bargaining power versus suppliers, the attraction is at 60% as the brand value of the company is pretty stable, and thus it neutralizes the bargaining power of customers. In terms of threat of new entrants, the threat is pretty low as Mitsubishi is a vast company that has long history, and it is divided into diversified segments. Hence, it would be highly unlikely for a new company to challenge Mitsubishi. And the threat of substitutes is moderately low. That's because customer related to the consumer segment may have lower switching costs. However, switching suppliers are not that effective for energy clients, and hence the trade-off makes it pretty neutral. Now let's look into the leadership and ownership of the company. The chairman of the company is Takahiko Kakiuchi, and the president and CEO of the company is Katsuya Nakanishi. The board composition looks pretty attractive as there are 15 directors in the company, which is more than Japanese and Asia's average, and independent directors percentage is at 47%, which is again higher than Japanese and Asia's average. The major stakeholder is Master Trust Bank of Japan with 15.9% share outstanding. Now let's look into the world-class benchmarking of the company. Profitable growth is consistently ranked below average among 1,370 large industrial companies worldwide, as both profitability and growth are below average. Asset efficiency is ranked at average. Expense control is ranked at below average. Revenue growth is in the bottom 20%, and expense direction is considered to be volatile from the bottom. The company is finding it difficult to redirect or reduce the cost, mainly due to scattered units across all continents. This is the WCB framework where profitability is average, growth is considered to be below average, asset utilization is average, net margin is below average, sales growth is nearly worst, net margin change is volatile from the bottom. Now let's look into the ESG of the company. The overall ESG score is 73%. In terms of environmental, the company has resource reduction policy, has not faced any environmental controversies yet. The company has emissions and waste policy, and some of the products are considered to be in greener organic products. In terms of social, the company has health and safety policy, human rights policy, fair competition policy, and implemented quality management systems. That's why the score is 100%. In terms of governance, the Mitsubishi has 46% of directors who are independent, and the position of chairman and CEO are occupied by two different people. And that's why it's the governance is good. However, one thing has to be noted here is that Mitsubishi Motors admitted to using non-compliant fuel economy testing methods back in 2016. However, no insider dealings were found. And also, the CSR and ESG reports are available in the sustainability report. Now let's look into the my profit and loss statement and my forecast. Revenue is expected to grow at a very gradual rate. That's because of the falling price of metallurgical coal, and same thing is displayed in the net profit part. Now let's look into the balance sheet, mainly asset side. That net fixed assets is expected to grow as the company is investing high in the natural gas segment. In terms of liability, long-term debt is expected to grow at a gradual rate. That's only because of the falling net profit. Net profit. And this is the cash flow statement where operating cash flow is fluctuating. That's because of the change in the net working capital caused by the assets and liabilities held for sale in terms of Lawson. And after 2026, it is expected to fall and grow at a gradual rate due to fall in net income. This is the ratios part where current ratio is expected to be around 1.4%. Gross profit margin is expected to be around 12.1%. This is the ratios part where net profit margin is expected to be around 4.8%, lower than previous average or due to the fall in coal prices. This is the free cash flow data where again change in net working capital is impacting the 2024 and 2025 data. However, it is expected to fall with fall in net profit after that and rise at a gradual rate. This is the relative valuation of PB to ROE. In terms on the forward to 2026 PB multiple, Mitsubishi is looking slightly cheaper compared to Japan, Asia, and the world. However, I forecast ROE to be around 9.7% in 2026 and lower after that, suggesting its PB to ROE would go higher in later years compared to Japan, Asia, and the world. This is the relative valuation of PEG ratio, where Mitsubishi is looking expensive in comparison to Japan, Asia, and the world market due to its significantly lower EPS growth, suggesting the stock is currently overvalued. This is the valuation and the target price I derive. I use a risk period of 1.1, market equity risk premium of 9, and bring out the cost of equity of 11.5% and WACC of 8.5%. I use a lower terminal growth of 1% and free cash flow to the firm because of the debt volume of Mitsubishi. In my base case scenario, I anticipate a gross margin of 12.1%, leading to a value of 2,278 uh, 2278 as per the free cash flow to the firm methodology. And in my sensitivity analysis, the optimistic case assumes a target price of 2521, and in the pessimistic case, the price is expected to be in 2030 per share. This is the sensitivity analysis slide. Let's talk about the risk. The main risk is the failing metallurgical coal business. Metallurgical coal prices is expected to fall by 28%, and with rising concerns over the use of alternative energy, that could end the life of coal business. That's second risk is rising ESG concerns. Multiple groups like natural gas, chemical solutions, and mineral resources may have growing implications of ESG, which could impact the company's growth. And the third risk is volatility of commodity prices. As Mitsubishi is into trading production of LNG, oils, and mineral resources, fluctuation in the price of such products could severely hit the firm's financials. And by that, I end my presentation stating the company is currently overvalued with a downward potential of 12% from its current price of 2,599 to a target price of 2,278. Thank you.
Excellent. Let me ask you, if the share price were to fall, 10, 15, 20%, do you think that it's worth owning this company, or is it not worth spending time analyzing?
I guess the diversity of the Mitsubishi is vast. So yeah, it has to spend. Or any analyst or any investor has to spend a vast amount of money. But the main concern is the metallurgical coal business that's falling down. It's a sell majorly because of that particular part only. Because metallurgical coal business is may have a short span of life as well as, and BMA, the largest contributor of metallurgical gas, has accepted the fact that the company the business could go down in recent 5 or 10 years. So I guess it's a sell.
Mm. And another question is, is this one of the trading companies that Warren Buffett owns now?
You mean the Master Trust Bank? Or
Yeah, I remember that Warren Buffett took a stake in like 5 large trading conglomerates, Sumitomo and some others. Is this one that he took a stake in? I can't remember.
I'm not sure about. I think the I'm not sure about that because this is the trust account and they have multiple. I'm not sure about that. I'm not
Okay.
in the
Yep.
detail.
Okay. Great. Well, how does it feel to graduate from the Valuation Master Class?
It feels great. It feels great. The transformation has been amazing to me. Basically, before the base boot camp, I was actually the knowledge was only in the books for me. It was all theory. So you guys gave the platform to value a real company in the real world. So now I can say the company is overvalued or the company is a buy because of the facts that I researched, I produced. So it's a proud moment for me.
And what do you think? What part of the Valuation Master Class was most valuable for you?
I think my perspective is a little bit different. I think the part that we were forced to value nine companies in the span of maybe 6 weeks. That gave the sense of discipline. That gave the one day if I miss one part, the other day it would be a real challenge to cope up with that. I think you taught the way that how professionals should be. You should walk out. So that's been the lesson I have learned.
And what do you think? What's the benefit you get from that experience when you go into a job or something? How can that benefit you?
I really understood the value of. I really understood the sensitivity of the job of financial analyst. It's not they are not just writing numbers. The research is vast. The work is hard. They are loyal. They have been very sensitive. They are being hard to themselves to produce a result, and that keeps the professionalism high. I think that keeps the integrity to the client or anything your stakeholders. That keeps something that keeps the integrity of to the client and even the company at high, and that matters for any employee, I guess.
Can you estimate how many hours you spent for the whole 12 weeks?
I think I spent nearly 400 hours on boot camp and the professional part.
Have you ever spent 400 hours on one thing in your life so far?
No, not really. I when I had to give an university exam. This is not the type of work that I had done there. It was pretty easy. It was all theory, but this camp has challenged me, and I like challenges. So it's been amazing journey so
And
far.
how has it changed the way you think about your future career?
I think I like the part of being the financial analyst. I like the job. I think I'm good at research. I'm good at numbers. I like to bring stories. I like to walk the talk. I like to speak in the large mass and say things that generally people would not say. So I think I'll pursue the job of financial analyst. Maybe.
Yeah, I mean, it's great because being a financial analyst, you're an idea originator.
Yeah, that's
We're
right.
counting on you to come up with the idea that then is going to impact the share price. So to
Yeah,
me, that's what I loved about the job and still
yeah.
do.
Yeah, me
Yeah.
too. Me too. I understood the concept of. I understood how sensitive the job is. That's a valuable lesson I learned in
Yeah.
this camp.
Fantastic. All right. Well, you should be very proud. That's a hell of accomplishment. That's probably it's the first time in maybe a long time that you before you'll do it again and spend 400 hours on something in 12 weeks. So well
Yeah,
done. And I'll see you in the Slack group and I'm going to take you out now. So all right. Great.
thank you. Thank you
Yep.
so much.
Yep. How about that? Pretty amazing. In fact, after watching that, it made me think, I don't think I'm interested in Mitsubishi. If someone brings it up on my radar, I don't think it's worth spending much time on, even if it did fall by 15%, because of course, as Pushpa has already mentioned, the coal business is declining. But I just didn't get a feeling like there's like a strong growth story over the next, 3 to 5 years. So it's a good demonstration of what it takes to be an analyst. An analyst is an idea generator. We are supposed to come up with ideas, put the numbers to those ideas, put the story to those ideas, and then bring those ideas out to the market with the hopes that those ideas will have some impact on share price. If you want to build a competitive advantage in company valuation, just come and see us at Valuation.